Hello everyone, welcome to my YouTube channel. My name is Divid, and on this channel I talk about stock investing and personal finance for Canadians. So if you're a Canadian that wants to maximize his or her return in the stock market, or just have the best practices when it comes to your own personal finances, then this channel is definitely for you. Now to start this journey guys, the very first topic I wanted to cover on this channel is dividend investing for Canadians, specifically dividend-based ETFs and which ones you should use to generate passive income. Now, for those of you that are completely new to the world of dividend investing or don't know what an ETF is, a very quick primer. So an ETF, guys, stands for Exchange Traded Funds. Now, an ETF essentially is an investment vehicle that allows you to own multiple different companies through this one investment. So what are the advantages of this? Well, if you're somebody that doesn't want to spend any time figuring out what is a good individual stock, for example, is TD a better buy than CIBC or RBC? Is Shopify better than X company? If you don't have time to do this and really speculate on which company is going to go up versus down, you can just buy an ETF because it gives you exposure to all of these different companies through one investment vehicle. Okay, so it's a great way to diversify your risk and make sure that you're actually invested in multiple different companies. Now, when it comes to ETFs, there's multiple different types of ETFs. You can have a value ETF, a growth-based ETF, which is based on aggressively growing companies, a tech ETF, an energy sector ETF, so on and so forth. You get the idea. In this particular video, as I hinted in the beginning, we're going to be talking about dividend ETFs. So what are dividend ETFs? Well, guys, a dividend ETF is essentially a collection of different companies within one ETF that pay out a dividend on a monthly, quarterly, or annual basis. Okay, so essentially by investing in this ETF, you're generating income on a monthly, quarterly, or annual basis. Okay, so it's an amazing way to generate passive income. Now, another very good advantage when it comes to dividend investing here in Canada is that if you invest through a registered account like a TFSA or an RRSP, anything you make in terms of dividends are tax-free, guys. So you don't ever have to pay taxes on these dividends if you invest through a TFSA or these different kinds of registered accounts. Okay, so that is huge because you're essentially making tax-free money on a monthly basis. That's truly passive income. Okay, so that's why I really like dividend investing. I'm a huge proponent for it, and I think anybody can do it. It's really not hard. So on that note, guys, there are multiple different dividend ETFs that are available to us Canadians. I'll be talking about my 3 favorite dividend ETFs, and we'll be talking about exactly what they are, what kind of dividend payout you can expect, what their exposure is in terms of what companies that these particular ETFs invest in, so that you have a very good idea of where your money is going to be invested. So to better explain this, let's head on over to my computer and let's have a deep dive into each of these individual ETFs. Now, the very first ETF that I want to talk about is this XEI ETF. So that's the ticker symbol. And the ETF is called iShares S&P TSX Composite High Dividend Index ETF. Now, I really like this ETF for multiple different reasons. The first and most important reason is that this particular ETF gives you a monthly dividend payment. Okay, so every month, based on the amount of shares you own in this particular ETF, which is XEI, you get a dividend payment directly into your TFSA or RSP account, which once again is tax-free. Okay, so that's really cool. Now, that being said, if we scroll down over here to where it says performance, we can see that over here, if I click this chart right here, we can see that, for the past 10 years, if you put $10,000 into this particular ETF, right now that would have been almost doubled, actually a bit over 2x. Okay, so now there's a bit of a downturn, so it's down a bit, but roughly you can see it's at 20,000. So you would have doubled your money in just appreciation. Okay, so that's just the ETF's value going up 2x. And then on top of that, you get dividend payments on a monthly basis. Okay, so you gain 2 times from the dividend payments, and on top of that from the ETF's value appreciation. Okay, so that's really cool. Now, if I go ahead and actually press X over here, the next thing I want to talk about is over here, we can see the 10-year return is about 7.17%. So that's what the value appreciation is on a 10-year basis for this particular ETF. Okay, so that's very good. Now, on top of that, if we go ahead and actually take a look at some of the key facts in this particular ETF, so we can see right here, guys, that the net assets under management are about 1.5 billion. This is in Canadian, okay? This was a fund that was founded about 10 years ago, so April 12, 2011. So it's a relatively new fund. We can see over here that the current price for this particular ETF is $26.11 as of January 26, 2023. So it's a relatively cheap or rather affordable ETF, so you can gain a lot more shares. Now, if we go ahead and actually scroll down over here, actually through the number of holdings, so this particular fund has 75 different companies within it, okay? So we'll talk about what these companies are in terms of which industries, what the distribution is, so on and so forth. But it's important to know that by buying into this particular fund, you will have access to, or rather exposure to 75 different companies on the Toronto Stock Exchange, okay? So that's a very good way to diversify your risk, okay? So that's very good to know. Now over here, guys, if we scroll down right here, we can see that the distribution yield is about 6.3%, and the last distribution per share is 0.1 cents. So what this essentially means is that for every share that you own in this particular ETF, you will get a 10 cents payment on a monthly basis. So let's say, for example, if you own 1,000 shares of this particular ETF, every month you'll get a $100 paycheck directly into your investment account, which you can either reinvest or you can actually use it for whatever expenses you want, okay? Now, the more shares you own, guys, the more the payment will be on a monthly basis. So that's one really cool thing about this particular ETF is it's a monthly payment. Now, if we take a look at the holdings, right? So what exact companies is this particular ETF actually holding? So we can see right here, guys, that we have companies like Suncor, CNQ, which is the Canadian Natural Resources, Royal Bank of Canada, TELUS, Toronto Bank, Bank of Montreal, so on and so forth. So the reason I really like this particular ETF, guys, is when it comes to the different sectors, we can see that it has a good mix of financials, energies, communications, materials, so on and so forth. If we take a look at the exposure breakdown, so over here we can see that when it comes to your financials, 29% of this particular fund is in banks and things like that. 29% is in this particular sector right here. And then we can see right here, it's a very good distribution between utility, communications, and materials, okay? So that's why I really like this fund, guys. It's very well diversified with not really a particular focus on a specific industry, okay? So that's something I did want to point out over here. Now, actually, if I scroll up over here, another thing I wanted to talk about is your fees. So what this essentially means is that you have a management fees of 0.2%. Now, this is a very reasonable and affordable fee. What this essentially means, guys, is that if you invest $1,000 into this fund, you have to pay a fee of $2 annually to the fund for them to actually create or rather manage this fund. Okay, so it's a very negligible amount when you look at everything that you're actually gaining from this particular fund. Okay, so that's very important to note is that the management fees is 0.2 to 0.22. Okay, so that's really, really good. So this is my first recommendation. Again, the ticker symbol for this particular fund is XEI. I highly recommend it. It's a great way for you to get into a bunch of different companies in different sectors in the Canadian economy. Now, with that being said, guys, the next fund I want to talk about is a Vanguard fund. It's a very popular fund amongst Canadian investors, and it's called the VDY ticker symbol, which is the Vanguard FTSE Canadian High Dividend Yield Index, okay? So let's go ahead and talk about this like we did for the previous fund. So over here, guys, we can see that since inception, the fund, which started at about $25 in 2012, is now worth roughly about $45 or so. So once again, guys, close to a double in terms of value over the past 10 years or so. So right now the fund is at $43.91. Okay, so that's what it costs. In terms of the management fee, it's very similar to our first fund with 0.20. So again, for every $1,000 that you spend, you have to pay $2 annually to the fund for them to manage it. Over here, once again, guys, the distribution is monthly, which means that you get a payment every month into your account for just holding these shares. The dividend yield over the last 12 months was about 4.42%. And we can see over here that the assets under management, that's what AUM stands for, is 1.9 billion, okay, 1.9 billion Canadians. Now, if we go ahead and scroll down over here, we can see that the income distribution per unit, which essentially means that for every share that you own, this is how much you will make. So they'll give you 0.15 in payment. So once again, if you own like 1,000 shares, that's about $150 or so you'll get every month into your investment account. Okay, so that's what this is over here. And then if we scroll down over here to your total return, so actually, let me just scroll down further over here. I just want to show you what the actual portfolio is like. Okay, so over here we have our portfolio. We can see in this particular fund, it's a more narrow fund in terms of their 47 particular stocks compared to our previous fund, which was about 75. So over here, right, guys, it's not as diverse as our first fund, but still it has about 50 companies that are high performing, high dividend paying companies. Okay, so that's important to know. Now, if we scroll down over here to exactly what the market capitalization is, we can see that in this particular fund, 93% of the fund is into large companies in Canada. Okay, so that's really, really good to know, is that these are established companies that this particular fund is actually investing into. Okay, once again, the region exposure is North America, so that's pretty straightforward. And over here, we can see that Canada is the main country that it's investing in. And then over here, in terms of the weighted exposure, so the different sectors, now we can see for this particular fund, it is a very high weightage towards the financial sector. So if you invest in VDY, essentially you'll be investing heavily into the financial banks in Canada. Okay, so 55% of this particular fund is actually focused on the financial sector, as opposed to our previous fund, which was a good balance of, financial and this actual second sector. But over here, you have a high dominance in the financial industry for VDY. Okay, so that's something that you should just keep in mind. If you're not comfortable with the Canadian banks or investing so heavily in a fund that focuses on these financial sectors, then maybe this isn't the best ETF for you. But once again, guys, over the last 10 years, it's doubled in value and it pays a dividend on a monthly basis. So this is the second key fund that I would highly recommend. And these are some of the main holdings that it has. So you have Royal Bank of Canada, which is a 14% of market value for this particular fund, Toronto Bank, Bank of Montreal, Nova Scotia Bank, so on and so forth. You can see a lot of the banks are actually in the top 5 positions. Okay, so that's what this particular fund is. And it's, again, a very, very good fund to go ahead and actually invest in if you are confident in the financial sector and if you want a monthly payment. Okay, so VDY was the second key ETF that I wanted to talk about. Now, on that note, the last key ETF I want to talk about is this ETF right here by the ticker symbol XIC. Now, this is a bit of a different ETF, and I'll explain why. So this particular fund is called iShares Core S&P TSX Cap Composite Index ETF, a very complicated name. So let's go ahead and talk about why I like this fund. So the first thing about this fund, guys, is that this particular fund is the most diverse fund. Okay, it covers pretty much the entire Canadian stock market. So if you own this fund, you can pretty much guarantee that you're a part owner of a lot of these big companies in Canada. Okay, so if we take a look at the price right here, we can see that XIC right now currently is trading at $32.80. So it's not a very expensive fund. And if we scroll down over here to once again see what the hypothetical growth of $10,000 would be at this fund, let's go over 10 years. So we can see that over a period of 10 years, your $10,000 would have been about 22 or 21,000. So again, roughly 2x, pretty similar to our first two funds. That's just an appreciation value without the dividends, okay? If we take a look at its 10-year performance, we can see that it performed at 7.69% over 10 years. So once again, very good in terms of appreciation. And now if we go ahead and scroll down over here, let's take a look at some of the key facts, okay? So over here, we can see the net assets under management are clearly much larger than the first two funds. Over here, we have 9.5-ish billion Canadian in assets under management. Okay, so it's a very, very large fund. It's traded on the stock exchange in Toronto. And we can see the number of holdings right here are 236. If you recall our first two funds, which were at about 75 and 49 each respective holdings, over here we have 236 holdings. Okay, so you're really getting exposure to a lot of companies in this fund. Okay, so this is probably, in my opinion, the most diverse fund. Now, with that in mind, if we go ahead and scroll down over here, we can see something important over here with this portfolio characteristic is that instead of getting your dividend payments on a monthly basis, you get it quarterly. Okay, so that's important to understand, is that you get your payments every 3 months as opposed to every 1 month. Okay, so that's something that should be kept in mind. Now, if we go to the holdings section right here, we can see that over here, guys, when it comes to the holdings, we have once again the main banks like RBC, TD, and then we have a bunch of other sectors like the industrial sector. So we have CNR, Canadian National Railway, so on and so forth. You have a bunch of different companies. Now, in all of these three funds I've talked about, there's a lot of similar companies, but that's okay, right? That's exactly what we expect. A lot of these big companies should be in these funds. If we take a look at the expense ratio for this particular fund, guys, so right here we can see that the management fee for this particular fund is 0.05. So this is a dirt cheap fund. When compared to our previous two funds, which had a management fee of 0.2, over here you're paying next to nothing for actually owning this fund. Okay, so that's one very good advantage, is that you have a lot of companies that you have exposure to, and it's a very, very cheap fund. Okay, so So that's important to note. However, don't forget the dividend payments are paid quarterly, not monthly. Okay, so that's something important to also understand. If we take a look at the exposure breakdown for the different industries in this fund, we can see that right here, once again, similar to VDY, it's more heavily weighted towards the financial sector, with about 30% of the fund being in the financial sector. And then you have things like your industrials, materials, information technology that lead this fund. Okay, so again, guys, it's more focused on the banks and things like that, but not as crazy as VDY, which had about 55% in the financial sector. Now, in my opinion, for those of you that want a fund that is, more risk diverse, or in terms of have a lot of exposure to a lot of companies, and you don't mind not being paid on a monthly basis, then this is an excellent fund, guys, that covers all of those bases and gives a good dividend payment on a quarterly basis. Okay, so that's why I wanted to include this fund in the top 3 recommendations, because it changes it up a bit and gives you a bit of variety to choose from. So that being said, guys, that's pretty much it for this video. A quick recap: we have XIC, which is giving you a payment on a quarterly basis, and it's actually getting you an exposure into the entire Canadian stock market with about 250 companies. You have VDY, which is more focused on the financial sector, and it pays you on a monthly basis. It has about 50 companies in the fund. And then finally, you have your last fund, which is your XCI, which we talked about, which is more balanced towards the different sectors like finances. And we have, I believe it was, the utilities, energy, so on and so forth. Okay. Once again, this last fund over here gives you a monthly payment. And again, it's a very, very strong fund. It's something that I would recommend. It's something I really like because of the fact that it has about 80 companies in it, and it has an equal distribution in the different industries. So on that note, guys, if you enjoyed this video, then go ahead and click the like button and share it with your friends. This is a new channel, so I would really appreciate your support. And if you're interested in more content like this, then consider subscribing to the channel. And I look forward to seeing you in the next video. Bye for now, guys.